It's time now for the business news with Nicholas Poynton, who's in our Auckland studio. OK, Nicholas, the government is being urged to be bold in capital letters in its economic thinking. What are these people? Who?
Yeah.
And what do they think bold is?
So an Auckland University think tank says, well, the pandemic, it's thrown up this, amazing opportunity to really rethink how our economy works, how it serves the well-being or serves improving the well-being of New Zealanders, and also throws up a bit of a chance to actually lessen the economy's reliance on international tourism and foreign students, which accounts for about 5% of our GDP. So the report's authors, which include luminaries such as the former Chief Science Advisor, Sir Peter Gluckman, and a distinguished professor, Arthur Grimes, say now it really is the time to be bold and that, really speaking to that saying, never let a good crisis go to waste. Because, when will a government ever have the mandate to go out and borrow $50 billion to invest in projects and stimulate the economy? And the report is filled with just a huge array of ideas or potential policies that this government should consider. But chief among them is establishing and investing in Auckland as an innovation hub, a place where research and development happens. They say it would be key to creating a space where like-minded individuals can come together, concentrating that talent, and it will also help at attracting foreign investment. Big global capital, when it's investing in a place, it wants to be investing in a place that's an attractive place to maybe live, to put their money, to know that there is talent there on the ground. There's that critical mass of all the things they need, and the report reckons Auckland is that place. It also said that we need to really restructure our public research sector, saying our current model of Crown research institutes, the way we fund them, the way they operate, they are out of date. We need new research entities that are attached to our universities that are also incentivized to provide rich information and share that with the private sector. So you can sort of see where they're going here, forming partnerships here and there. But what is interesting about this report is that it talks about that none of these things can happen in isolation. So while you're talking about creating Auckland as a hub, a place where more and more people will want to live, they also talk about how necessary it is to enact policies that will curb some of this overheatedness we're seeing in the housing market.
Yeah, I was going to say it will thrill a lot of people to make Auckland the hub of innovation.
Exactly. There needs to be a way to, increase the supply. There's need to create ample public transport options out there for people, and also investment in things like horizontal infrastructure. That's like pipes underneath the ground, because if more people are going to be living in Auckland, they need to be able to move around. And look, one of the report's authors, when I was talking to him about this, he talked about he's been drumming on about this for about 20 years, and I asked him, well, why has no one done anything about it? And he talked about, well, when most governments, when they're in opposition, they have all these heavenly ideals, but when they get into Parliament, they have no earthly purpose, for lack of a better word. And he says, look, they just fall victim to these existing lobbies and doing things the way that they've always been done. But now is the time to put money into the future, not to past industries.
Now, I know our listeners follow this story with great interest. This is the wage subsidy and big companies drawing down that subsidy who have. Now, you've got one who's paying it back.
Yes, the retirement village operator, MetLife Care, says it's going to repay about $6.8 million off the wage subsidy that it received. The company said when the scheme was first established, it did indeed qualify for it at the time. It's a company that did report about a $33 million loss this year, compared with about a $50 million profit last year. The company's board, and just remember with this company, they have just changed owners, so maybe suggest that the new owners, which is a Swedish-backed private equity firm, maybe they're the ones that are pushing this, but they say it is in the spirit of the scheme to pay the money back. And that really is an interesting message and an interesting sort of point or position to take on this. But it really makes you wonder if we've seen a bit of a mood shift here. We've seen a couple of businesses here and there make big public announcements that they're going to pay it back. And you just have to wonder if we're going to see more and more businesses start to follow this trend because maybe they're just scared of sort of the repercussions they might be getting.
The public backlash. Bring us up to date with the market numbers today.
Well, yeah, our stock market has tailed off in late trading this afternoon after some strong gains this morning. Our stock market is really setting itself up for a Biden win. It's finished up 87 points, about 0.7% to 12,449. Our dollar is at 67.7 US cents, 93.4 Australian, and 51.6 British pence.
Thanks, Nicholas. Nicholas Poynton with Business News.